Hey everyone, my name is Eric Bahn, and I'm one of the co-founders at Hustle Fund. And today we have a really cool session. We have a fireside chat featuring Immad Akhund, the founder and CEO of Mercury, the banking platform designed specifically for startups, one of the most popular banking platforms that our founders at Hustle Fund choose to work with and partner with across our 302 portfolio companies. We'll talk about that in a little bit. So today's session is going to be great because we're going to be speaking with Immad about an important aspect of any successful fundraising process, which is building out your investor pipeline. So I need to confess something, like I'm kind of suffering from a little bit of post-traumatic stress disorder right now because I'm going back in time to when I started my first company in 2005. And I had this exciting vision of what I wanted to build and some initial confidence that I could do it. But there's only one blocker, which was I felt completely at a loss as to how I would go about finding investors to take interest and support my startup. Ultimately, I was forced to bootstrap because I had no freaking idea how to fundraise. Immad at this point, on the other hand, has had a slightly better journey than I've had. He has raised hundreds of millions of dollars across several startups that he's founded. And we are going to get his expertise about how founders can cold start this investor pipeline process. So maybe we're going to introduce a little bit of PTSD as well, going back in time to some of his earlier companies and talking about how he was able to do this in the beginning stages of his journey. So really quickly, before we start today's session, I just want to talk about how we're going to structure it. I have about 25 minutes of questions I prepared. I'm going to deliver to Immad to learn about him, learn about the investor pipeline processes that he went about successfully. And then if you have questions, please put them in the Q&A section of this Zoom webinar. Feel free to chat with each other. In fact, it'd be really great if you provided a little quick shout out as to where you're based and maybe what you're working on. But it's gonna be a little bit too hard for us to monitor all the activity there. So if you could please direct it to the Q&A section. For the second half of the session, we'll bring your questions up and we'll try to answer as many as possible. So that said, let's bring Immad into this. Immad, thank you so much for being here. We're so excited to chat with you today.
Yeah, thanks for having me, and thanks for the great introduction. I've been an entrepreneur actually since 2006, so have had lots of successful and failed fundraising processes that I can also share your PTSD with.
There you go. If you need tissues on the side, I have mine prepared. We can cry it out and then just work it out today in the next 57 minutes or so. But let's talk a little bit more about that. So this is a good segue. Like, tell us a little bit more about who you are and what do you do?
Yeah, I'm the founder and CEO of Mercury. So Mercury is banking for startups. I started this company in 2017. We launched in April 2019. The idea is we give primary banking experiences to businesses in the US. That's the short version.
That's awesome. I'm sure that pretty much a lot of people here at this point have heard of Mercury. If you guys have been starting startups, one of the best options, as I mentioned, for you to check out for a partnership with a great banking partner. Now, I want to go back in time a little bit. So we kind of began our journeys together. You talked about 2006, but among one of the first companies that you started, I understand, is a business called ClickPass. And a lot of the people who are here today are first-time founders or just beginning their journeys. Can you start by telling us a little bit more about what was it like at that time to fundraise for ClickPass?
Yeah, I mean, so ClickPass, that was 2007, and we just moved to San Francisco. We actually raised from friends and family, mostly actually my co-founders, friends and family. And when we moved here, we actually launched, we made some progress, had lots of users, didn't know how to make money. And I actually went through a pretty long fundraising process here where we basically failed because, back then people were like, okay, how will you make money? Like we had like a few million users through this kind of single sign-on thing. And we just, as an entrepreneur, I mean, thankfully this has changed, I feel, in Silicon Valley, but back then there was a feeling that you could be the next Twitter or Facebook and you don't need to think about how you make money, you just get the users. But even then, I think it was like flawed thinking back then. but we didn't really have a good story for it. We were just like, oh, we'll just be really successful and somehow things will flow kind of thing. And yeah, that's maybe fine for like a friends and family round, but when you're talking to kind of Series A investors and seed funds, that was just not like a good story.
If you're comfortable sharing, I'm curious to hear how much that friends and family round was when you're just getting going with ClickPass.
Yeah, it was 300K. I think it was around like 1.5 million valuation. But yeah, that was back then we were in YC with Dropbox was in that batch. This is summer 2007.
Yes.
And really, like, we were one of the best funded companies, like by like, maybe there's like, it used to be brutal back then, you know, it was like getting funding was really hard. Like only a few YC, like about 50% of YC company died like instantly. Like after demo day, they didn't get funding, they were gone. And then if a few survived and eked by kind of thing, and then obviously you get a Dropbox or something that would like it.
Well, I'm curious to dive into the reasoning for YC. So you're coming in, you immigrated over to the Bay Area, brought your company from the UK over to here, and you had your some family and friends money possibly at that point. Did you think that it would be possible for you to engage and build a pipeline of maybe VC or more institutional investors without YC, or was that one of the primary reasons actually to participate?
Yeah, I think, you know, people often like think, oh, let's go talk to investors. And like they think of that as the goal. But I think that skips a few steps, especially if you're not networked and connected. Like the way to get to investors, I mean, there's two main ways to get to investors, in my opinion. Number one, you just make the sick company and they will come to you, right? Like it's just like your revenue is crazy, you've got lots of traction. Yeah, like you're just going to be successful no matter what in a fundraise because you're just growing that fast and everyone knows you and etc. And then the other way is you try to get to investors and you got to eke it out and you got to fight it out and you're not necessarily a hot commodity and you have to. And in that way, in that kind of world, it's very hard to do it just from like a complete cold start. I'm going to go email investors and go do it. It's probably possible, but hard. I think the step before that is actually being well networked. Like one thing maybe I think I didn't really understand, but like investors actually trust other entrepreneurs more than they trust other investors or other industry people. Basically, whenever another investor tells them about an opportunity, like they feel it's like a little biased because that investor might be an investor in that company, so they're not getting like, you know, a fair share. And also like investors don't necessarily think other investors know what's great, whereas like they do think a great entrepreneur knows what's like good. And so I think step one for most people is actually not to try to get to investors, but to get to entrepreneurs. So how do you network with entrepreneurs is like an interesting question. And like Y Combinator for me was like the best way to do that. So a lot of the friends I made, I did Y Combinator twice in 2007 and 2009. And a lot of the friends I have today are people I met in 2007 and 2009. But that's not the only way, right? Like you can be, like Hustle Fund probably has like a great community and that's a good way to do it. But you can just be out there. Like when I first started as an entrepreneur, I was in London, which had, back in 2006, doesn't have that many entrepreneurs, but I went to events like 3 days a week, right? I would like work really hard all day and then I would go to events just to meet as many people as possible. And I don't think I would have got into Y Combinator if it wasn't for the effort I did in networking then. And I'm not even like, I'm kind of a shy person, so it was hard going to so many events, but like you just have to do these things.
I mean, showing up is half the battle, right? I did a lot of that as well in my 20s, and it was usually just like one or two meaningful people that would meet these sessions, and then sometimes that's all it took, right, to unlock.
I mean, you have to meet like 100 people to have like a meaningful connection, and then you do that over and over, and that becomes powerful.
Yeah. Okay. Well, I want to actually ask maybe a more tactical question on this question, and then we can move on, but which is, so let's say that we're talking to Immad in 2006 or 2007, he's here, and then he's staring at a Google sheet they just created. And on the title, it says, list of investors I want to speak to. So what did you actually do to populate that list, to create like even the targets?
Yeah. I mean, like you go through everything, right? Like, so number one, it's like you look at competitors, people in the industry, companies in the industry and like who are they getting funded by. You look at TechCrunch, you look at all of these things. You're like, okay, you try to like make a list there. Then you go talk to entrepreneurs. Again, other entrepreneurs are a great source because when you look at things online, you don't have good context. Like you don't know who is leading really and like how active they are. Whereas if you go talk to like 50 entrepreneurs that have like somewhat that are active and somewhat recently raised money, they will tell you, hey, these are the 10. I mean, nowadays, especially like people are raising money from like 40 people at a time, right? So like if you have a helpful entrepreneur, and entrepreneurs always trying to be helpful in my experience, at least, you can fill a list of like 200 pretty quickly. You just go, okay, who were the 10 people that you think would be most suitable to this company that were most helpful to you? Put them in your list. I'm a big believer in like every time I talk to someone, like try to like grow the pie as well. I mean, it's obviously much easier once you have some money because then you can say to that person, okay, who are the 10 co-investors that you invest in with the most, right? Like everyone's got some investors that they invest with a lot. And those people tend to have like similar mindset and thinking. So you can, once you like make some inroads, you can like grow that network quickly.
So I'm kind of excited about this next question because I think you now have perspectives on both sides of the table. You're an active seed investor as well. So if you think about from everything from ClickPass in the early days to Mercury today, how do you define what a good seed investor is? Like, what kinds of things define great seed investors?
Yeah, that's a good question. I think of things as like, there's a bunch of red flags and then there's a bunch of, I know what the opposite of red flag is, but green flag. Yeah. So I think the most important thing actually is to not have red flags, right? Like, I think actually that's like the optimization number one. And to me, red flags are like, people who haven't invested very much. I know that's like a bit of a chicken and egg for them, but like you don't want to be the first investment from an angel investor. Like unless they're like an ex-entrepreneur and they like really have like an entrepreneurial mindset. If you're like the first angel investment for someone, they're going to be like, they don't know how to work with founders. They're going to be like asking you annoying questions, doing diligence in a weird way. Like, I think a lot of like things that I see that are like big red flags are like people who are like very early in investing and just like, just are like onerous investors. Like, you don't want people that are going to make your life difficult. You want people that are going to actually add to your life. So that's a big red flag. I think other ones are, how much they get your vision. Like sometimes and I've been actually, especially early on in my investing, I was probably also at fault with this. Like sometimes people see you and they think of a different idea. Like that's not your vision. And you as an entrepreneur will be like, oh, I want to sell this investor. So I'm going to like almost pretend that I get, instead of pitching your own vision, you start pitching their vision for what you think they want you to hear. That might sound good, but then like after they've invested, they're like, okay, why aren't you working on this thing that I wanted you to work on? And then that can create like a clash as well. So you don't want to like go down that road. Anyone that's just like, it's like actually like similar to employees, like, you just don't want to work with assholes, right? So anyone that's like being weird, being egotistical, like, being onerous, like making weird demands off you, like making you fly out to things when like you could do it over Zoom, all of those kind of like bad things, like, become worse later on. I think if someone's going to be a lead investor, you want to go do your diligence, go talk to minimum 3 founders that they've invested in, because that's ideally also founders that they invested in that failed, because then you can really see like what they are like to work with, how supportive they are in bad times. And the best investors should have glowing review from all their founders, right? That's my experience anyway. So that's more like the red flag stuff. The good side, the positive attributes to look for. I have a massive bias towards investors that have been entrepreneurs before. I just think there's plenty of good investors that haven't been entrepreneurs before, but personally for me, especially so with Mercury, because we target entrepreneurs as like our customers, I just think like people who've done it before just know what it's like and are not going to be like, they're going to be supportive, and like they're kind of doing it for the right reasons often as well, I find. Whereas like, people who haven't done it before are doing it for money more. So, and sorry about like this kind of simplified classification of the world, but like I think that's like a very different mindset to like entrepreneurs who turn investors, where they're kind of doing it to support and help other entrepreneurs. So that's probably like the biggest, I would say, green flag for me. Yeah, there's also just some investors that are just like really good. Actually, this is another really important green flag. People who have a very strong reputation being founder friendly. Those type of investors, like the reason they have that strong reputation is because they're willing to protect that reputation, because it's hard to come by that reputation.
Yeah.
So even when things go wrong, and like a lot of the time with these situations, you kind of, if things are great and rosy, it doesn't matter, right? Like every investor is going to be a great investor. So you kind of have to think about what are people like when things go wrong. And when they have a founder friendly reputation to protect, they will do things that are not necessarily aligned with their incentive structure just to protect their reputation.
Well, I'm really curious to see how this evolves, because many of us here in today's session are focusing on the early seed stages, but what kind of mental models of what a good investor looks like, how does that change like Series A or Series B now that you're so much further along the journey?
Yeah, I think the biggest factor, which seed fundraising is a whole different world to Series A fundraising, and I think people don't always conceptualize that. Like with seed fundraising, maybe there is a lead investor, but often there isn't. But even when there's a lead investor, you're not quite committing to like like when you get a Series A investor, you're basically committing to working for this person for the next 10 years, right? It is a real long-term commitment. Like they're going to be on your board. They're going to be part of like your decision-making to exit or future investment or strategic things. Like it's a much, much bigger commitment compared to seed investors. Seed investors are, in some ways normally around until you raise a Series A, and then they're still there and they can be helpful, but they're not going to be like helping you build the company generally. I don't know, a hustle fund might be different here, but that's been my experience. So the decision with Series A is much harder in my opinion, and it's also harder for the other side because the VC is also making this very long-term commitment.
Yes.
So it's way more about like like you have to think a lot more like how do your personalities like mix together, like what is this person's like philosophy on how they work with entrepreneurs, how they think about the world, and what do they bring to the table. So I think the Series A decision is a much trickier decision and much harder to get Series A's done, right? Like seed, even now, like raising a seed round is much, much simpler than raising a Series A. I mean, Series A, you kind of expect it to be a product market fit to some extent. But it's also just like the world of people who are doing Series A's is much smaller, and it's a much more tricky decision for both sides.
I mean, for your next raise, if you just want to call it seed and let Hustle Fund in, I'm down. Whatever, put it at $1 billion valuation. I don't care. Right? We'll call it seed. Whatever. Well, for those of you who are just joining us, sort of in the middle of this conversation, we're speaking with Immad Akhund, who's the founder and CEO of Mercury, an amazing banking platform that has scaled up to crazy heights and has still so much more headroom to grow. And he's also has the battle scars of having gone through several startups before and seen the good and the bad about building investor pipeline, fundraising. We're talking about that. So if you have a question, again, pop it into the Q&A section. And towards the second half of this webinar today, we will try to get through as many of your questions as possible. So I've been really excited also about this next question for you too, Immad, which is, fundraising is always a fun thing. So you got your list and you're going through it, and invariably most people say no. And actually now you're in a seat too, where you have to say no as well as an active seed investor. But let's start with like the founder version of this, which is like when people say no to you, what happens next? Do you just say like, you're dead to me, goodbye? Or like, were there ways that you've tried to resurrect or keep them warm? What was your strategy, especially as an early founder, for those who had to say no to you?
Yeah, I think like once, I see this as an investor, but I also saw this as an entrepreneur. Like once someone says no to you, it's a big decision that they've made, and it's very hard to flip them. You can maybe flip them like 6 months later or 12 months later, but they are no longer useful to you. In my opinion, I'm sure there's exceptions to this, but in general, they're no longer useful to you for this fundraise. So I think the best way to get over the nose and to actually get your actual fundraise done is to have a pipeline and like not be relying on any one person, right? The fun thing about fundraising, especially in this current environment, there's like literally thousands of seed investors now. Mm-hmm. So you should just have another 10 people that you're talking to that you can like keep moving on from and like, keep the momentum going. you don't want to get too stuck in like, oh, it's a no, let's try to flip it. So I would say that's the biggest thing. I'm trying to think of like, there are people that have said no to, and some I've massively regretted as an investor. But it's always been like, if I have changed my mind, like they've made progress, I've learned the error of my ways. It's always been like at least 12 months later. So I think it's, if you have someone say no to you, and it's a good person, and you definitely want them in later on, I think there's lots of ways to keep it a little warm, right? Like, hey, focus on like getting your fundraise done. Don't like be distracted, but afterwards you can follow up and say, hey, you know, I know you said no, we did this fundraise anyway. Here's the progress we're making. Let's grab a coffee, whatever it is, right? So I think it's worth like keeping it warm. I would say the people that to keep the warmest are people that will help you in your next fundraise. So if you're raising a seed round, you happen to talk to a few Series A VCs, they said no. Often they'll say no with like a phrase like, you're too early, which is like a very, you know, soft no. But that's given you an excuse to keep that relationship going. And I think that's actually probably the best way to get a Series A done. You collect all your no's, you update them every 3 to 6 months, try to meet up. And then by the time you're ready for a Series A, those no's hopefully will like flip.
Did you ever find that some of those investors who said no to you and never ended up following up with investment, did any of them ever turn out to be kind of strategic or even helpful for you in other ways?
Yeah, that's a good question. I mean, I think I would say the best way was like ones that then ended up funding my next company. Actually, like
yes,
our seed investor. Actually, I mean, I've had every VC say no to me, so this is a little unfair. But both our seed investor in recent Horowitz and our Series A investor CRV said no to us in my previous company, right?
Amazing.
But yeah, and they said no for good reasons. Like, you know, that company didn't end up being $1 billion company, but it helped me establish a relationship with them, and they saw that like, hey, I had consistency, and you know, I did sell that company. So they saw that like I delivered an outcome. And I think all of that, like, you know, like literally CRV, my Series A investor, like literally had said no to me 10 years earlier.
Holy smokes.
But it meant that I had a relationship with them for 10 years to some extent, right? Like they knew me, they'd seen me grow as an entrepreneur. And so I actually think that's like probably the biggest thing you can get.
Well, let's double click on this a little bit, Immad, because it's kind of crazy. So in the intervening 10 years, what were you communicating to them to sort of keep it going? Was it like a yearly check-in, or what was this? Coffees?
It was actually, it wasn't like some like, I didn't think, oh, proactively, I'm going to get them 10 years later, right? It was much more casual. Like we were in similar ecosystems. And like, for example, I was an investor in Airtable, and they were an investor in Airtable. So yeah, I ended up meeting the person who was involved in that round, and friends of friends type thing. So it wasn't like necessarily like every year I was like, here's my list of like people I'm going to check in with. It was a much more kind of like a casual and just being active kind of situation.
Got it. You know, there's a saying that my partner Sheehan, who's a general partner in our fund, has said that I think actually kind of speaks to some of these principles that you're sharing, which is she always says, you can either treat life as a single turn transaction or a multi-turn transaction. So example is like, I have this Honda Accord that's like 16 years old sitting in my driveway. If I were to try to sell it to Immad and we don't know each other, we might want to just like screw each other as bad as possible, because like this one used car sales transaction, we're never going to see each other again, right? And like that kind of creates, I think, like some of that thrash, and it's a very unpleasant kind of process. But a multi-turn transaction is like, you know, we're not in it for just like one thing. Like we can just enjoy each other's company, build a relationship. There might be actually many opportunities for us to collaborate as either an investor or co-investors, or just even as buddies. And it sounds like actually you've been the beneficiary of running an infinite game versus actually trying to run a single turn transaction game.
Yeah, I think one of the things that I often tell entrepreneurs is, and I didn't really truly grasp this until I became an investor as well, is like the investor is also just a human. You know, I think sometimes like, especially if you're like recently been in college or something like that, you think of like the investor as like your teacher or superior or something like that. And that mindset is like, you know, kind of acts as a barrier to you building like a true relationship with them. I think it's much better if you're just like, hey, this is just another person. they're trying to succeed, I'm trying to succeed, we can help each other kind of thing. And that's what allows you to build like that kind of multi-turn kind of game mindset.
Amen, brother. Well, I think there's time for like maybe one or two more questions before we open it up and actually have our audience here today have a chance to ask your questions. Again, if you've got a question for Immad, put it in the Q&A section. We're going to get there in about 5 minutes. Okay. Does cold emailing ever work? Did you ever try doing this as a founder?
I think you need a strand of connection. I think like a pure cold email where there's nothing you can rely on is a low probability kind of event. So actually the most famous example for me would be there's a GP in Andreessen Horowitz. His name's Alex Rampel, and he was the first fintech GP. So back in 2017, I wasn't trying to raise money at that point. I just was like figuring out how to do a bank. And I was like, oh, this guy would be great. And I could have got an introduction to him because I know a few other GPs in Andreessen Horowitz. And as I said, they'd said no to me in my previous company. But I was just like, okay, that's going to take a while. I have his email address. Let me just email him. So that was a cold email. But I was like, literally the first, I could probably pull it up, this email. But literally the first sentence was like, I know 5 people that we both know, but I thought it would be easier if I just email you. And, I named a few people that I knew, and he responded, and they ended up leading our seed round. So it does work, but I would say you normally need some sort of in connection. I think if it's like super cold, I have no connection to you. We're not part of some alumni network of some sort. A YC founder emails me, I respond, and I have invested in YC founders that I've never met before that just cold emailed me. But we had this common connection where YC is a core part of my journey, and I'm much more likely to respond to that. Completely cold, I don't know if I've ever invested in something completely cold. I'm sure there's probably some exception. But yeah, there's just a lot of noise out there, so you just need to do something to be above the noise. I think you can. I think the easier way is actually to talk to, as I said earlier, to talk to other entrepreneurs. So other entrepreneurs who aren't as busy, right? Don't go to a unicorn entrepreneur, but you go to a Series A, Series B entrepreneur. Most of them, I have time for other entrepreneurs because they're in that journey. They were at the start. They really empathize, and that's how I would try to go through the cold way if I had to.
There's a good tip in this. So I think for those of you who heard this response just now, my distillation of that is, if you have to go cold, which by the way, at Hustle Fund, we love cold. I mean, that's how we find some of the best contrarian and right founders sometimes are those outside of our network. But establishing commonality as fast as possible in the beginning, that's the opener, right? The worst cold emails I get are just hi, can I get 30 minutes of your time? I want to tell you about my startup, and there's just no context. And there's a lot of volume that investors are seeing these days because it's such a frothy environment. So we just have to make triage decisions very quickly. So I think there's a cool lesson in what you just shared there, Immad. Now,
I would say both establish commonality and then why you're great. I think those two things combined is if you've got some actual revenue and you can say here's our commonality, and now we're making 10K a month and growing 30% a month, then Eric will respond to that probably.
Well, let's talk about that for a second. I wonder if there's a cultural bias in what you just shared. So Americans are great about saying look at me, Immad, I'm the greatest, right? In the UK, my friends, whenever I ask them how things are going, they're all right. And then when they say that, it's just oh, things are going well, right? But it's but there's also a little bit more of a muted kind of sense of I don't want to overbrag.
I grew up in the UK, so I empathize, and I have a general humble attitude. But I have to change my mindset when I'm fundraising, and I have to tell people to change my you're selling. This is it's a sales game, and doesn't mean you lie about it, but you have to put on your best face. You have to give your best stats, and you have to put the most optimistic view on what you're doing forward, and that's just part of the game. You're not going to be fundraising is a sales process. If you consider it just you got to bring your best game to that sales process. That's just the way it is.
I love it. Let's try to sneak in one more question before we open up the Q&A. So I want to go back now into the present. So we've worked through the trauma, we've processed some of the emotions of the past 15 years of you building, and now we're here at the present, and you're a very active angel investor. what founders actually impress you the most? Are there certain kinds of heuristics that you're looking at or patterns that you're seeing, which is like, these are the kinds of founders or what these founders are actually expressing that get me most excited?
Yeah. For me, I mean, there's two attributes that I look for a lot. Yeah. I think it ties into like the incentive for why I'm even investing, right? Like, number one, I love founders that are really helping solve important problems. I want to be part of that if I can, whether it's, it doesn't have to be like climate change or space tech, but yeah, anything where I'm like, even as an entrepreneur, like I use a lot of B2B software. I'm like, oh, yeah, this is such a pain to do X. Like, if you take Airtable, like it's such a pain to like make apps. It's great that they like help make that. Or yeah, as a consumer, I can empathize as well. So that's one part of it, like solving big problems that are really helping the world, I think is like an important thing for me. And then the second one is where I can learn from the founder. I love learning new things. And sometimes, obviously the founder may not be a long-term entrepreneur, but presumably they have like some real deep understanding of what they do and how they came to that realization. And everyone's got something to give. But where I feel like, okay, that person really gets that and like, can distill their understanding into like a nice package that like helps me learn about that space. That's like a powerful feeling to me. Like I feel great after that conversation. I'm like, this person's solving something great and they are like a true expert in it and they can explain it to me. Like that feels like powerful to me. Like a great example of this is Prometheus. It's a company that just like announced their unicorn funding round, invested in their seed round. They basically like they were like the perfect package. Like they literally take carbon dioxide from the air and turn it into gasoline. It's like an insane thing. And this guy explained the whole process to me in like fairly minute detail in like a half an hour conversation.
Wow.
And I like he is a true expert in like doing something completely crazy. And that's like, it was a very easy investment after that.
Freaking cool. I very much enjoyed this, Immad. And if you're down, I think we can maybe go to the audience and see what questions are coming. And for that, I want to call out my amazing colleague, Janelle. Yo, Janelle, are you seeing some questions popping in the Q&A section? By the way, in the audience, if you have a question, please continue to ask your questions. We'd love to see what people are asking if they have a question for Immad about the fundraising journey and so forth.
Hi, Eric. Hi, Immad. The Q&A is out of control right now. Thanks, everyone, for dropping in all these fabulous questions. I'm going to give you guys an easy one to start. What if you are a part-time founder? Does that throw up any red flags for potential investors?
Yeah, I'm part-time founder, huge red flag. Like you're asking someone to like believe in you, commit you money, make a big decision, and you're not willing to like, do it yourself. I think it's completely reasonable to have a side project and bootstrap your company. But in my opinion, if you're going to go to investors, you got to like really commit and show that you're serious about it.
Yeah, I reluctantly have to agree. I mean, so we're running an institutional venture capital fund, and one of the signals that we need to show to our investors is a serious commitment into building a company. And a really simple signal, a green flag to use Immad's words actually, is just like the fact that you're exclusively focused on this work. Now, I realize that's actually quite a fraught statement. So when I was starting out in 2005, I had to work for 3.5 years on a day job and have my project on the side because that was the only way I was going to eat and have a house or a roof over my head to that point. So I'm very sympathetic about people in those situations that don't have that kind of privilege to transition full time to make that big bet. But that said, I think this is absolutely the reality that this is one of the most simple signals to accomplish is going full time if you can make it happen.
Okay, awesome. I like the green flag term. All right, for pre-seed or seed stage founders, if you two were founders today and actively raising, would you seek angels or just the VC world that are early stage investors?
Immad?
It's, with fundraising, unless you're, a pro and, you have like already the network and the company's great, like you do everything, right? I think sometimes people like try to be very specific and go slow and all that. yeah, there's a lot of angels out there. They're great. Talk to them. There's a few VCs that do seed stage. Talk to them. VCs, I would say, look for very specific things. Like you kind of have to be a hot market or a second time entrepreneur. Like the Series A VCs that are now doing seed, whether it's in recent orbits or Sequoia, or who was the other one that did it, Greylock, like they're not going to fund most things. They're not going to take massive pre-seed risks unless like you have like some like qualifier that like makes you safe from their perspective. So I wouldn't put your hopes in that. That's like a dangerous path. There's only a few of them, so you have to do both, in my opinion. At some point, you just have to commit to one or the other as well. But yeah, I think there's no reason. Yeah, what I say to people is don't do fundraising as a part-time thing. Actually, it's even more extreme than what Eric's saying. You can not only not be a part-time founder, you also can't do fundraising part-time. Like when you're fundraising, just commit to it. You do everything. Try to get like 20 meetings a week. Do it for 3 weeks. Get it done. That's much better than like prolonging it over 6 months.
I have nothing to add to that.
All right. One and done. Okay, let's talk a little bit. There's a lot of questions coming in about a timeline. Okay, so Immad, you just said 3 weeks, 20 meetings a week, get it done. But if you're a founder planning out your raise, how far in advance? And I mean, can you talk a little bit about that timeline and how you're planning out your work to get ready for that raise?
I'm, maybe this is partly because of this PTSD where I failed so many times, but I'm planning my raise from like, I'm thinking about my next raise before my previous raise is done. Like I'm planning it out because like, even before you come to the raise, like what does your metrics look like? What have you de-risked? Like, why do you even deserve to raise money? Right? Like, that's a big question. Like, raising money is not like something everyone will get. And like, part of that's whatever someone's biases or, but part of it's like maybe your company's just not ready for that like next level, right? So I think it's like you want to, I'm always talking to other entrepreneurs and investors and saying, okay, what are the milestones I need to reach? What do I need to de-risk? And like, sure, like some people will give you like bad answers to that, but if you ask enough people, you can triangulate to like what is correct and use your own instincts, obviously. And then, I'm thinking 6 to 9 months at least in advance and thinking, okay, this is the metric I want to reach. This is the kind of growth I need to do. To achieve that, I need to like hire either salespeople. I need to work my ass off on sales, or I need to like do some more ads, or like whatever is your distribution strategy needs to build towards like that milestone. Or I need to like build product if like, if you're still in the product. So that's step one. And then, I'm making this list relatively early on. Ideally, the people I want to raise from, it's much better to talk to people before you actually need anything from them. So ideally, you're building this relationship 6 to 9 months before, which isn't always possible, of course. But yeah, I think often it is actually like if you're doing something interesting that they would fund eventually, they kind of also don't want to be rushed and be in this crazy fundraising environment, right? So I would say also 6 to 9 months in advance, I try to make a list of people that would be good targets and like try to get connections to them and go talk to them. And like, investors, their job is to talk to people. So that's not actually like as tricky as it sounds. So by the time I get to a fundraise process, I have the metrics that I need. I have the connections to the investors, ideally even a relationship with the investors that would be like prime targets for me. Then my process is like spend a couple of weeks before fundraising and get everything right, like build a deck, have, you can call it a data room if you want, but like, have an idea of like how this business grows, what's the projections like. If you have some traction, what is my retention? What are my numbers? What are my accounts? Like have all the basics ready. It's not that crazy. Like it's not that much stuff. It's like projections, metrics, retention, like that's it. And like product plans, maybe stuff like that. And then I will try to like arrange as many meetings as possible in the shortest time period as possible, like ideally a week, maybe 2 weeks, and just go. That's just your life. Like you go bang, bang, bang.
Yeah.
Like, and you get so much better at like talking to investors the more you talk to them. Like you know the question, the last time you answered that question, what you did not answer well, so you have a better, and you just get a lot more confident about it because you're like saying the story over and over again. So by the time you get to your 20th meetings, you're like way more convincing than your first meeting, even though like nothing has actually changed, right? Like it's the same company and the same story. Even before talking to investors, I actually like spending a week-ish talking to all my friends and like just pitching them the same thing, because hopefully you have like some friends that are interested in this stuff and they can give you feedback. Again, don't take everyone's feedback. I mean, especially if they're not like successful entrepreneurs, but you can still like take, just like saying the pitch over and over is just going to make it better. Like that's just the way it is. Yeah, and then a week or two into it, you're going to feel like good because like hopefully you've got 1 or 2 investors committed, the pitch is getting better and better, and like, you know, this cold start problem, like the hardest check is the first check. Like any round, like that first check is really hard, so you have to work really, really hard for it. But once you get some momentum and you can say to the next investor, hey, I have 200K committed, here's my 6 story because I practiced it so many times. Investing can quickly flip from like almost impossible to like very easy. You have to like work really hard to break through that barrier.
Janelle, I have a comment and then I have a follow-up question related to this excellent question that Immad just answered. So the comment is this: if you go to YouTube and search for Hustle Fund, there's a video actually that we put out, which is a session from earlier this year, which is called Fundraising via Your Investor Newsletter. So one strategy that we really like to teach our founders at Hustle Fund is, as you're building these connections with other investors, angels, or other VCs, one strategy that we like to encourage is to invite them into your investor newsletter if you think that they could be a potential fit for the future. And that can actually turn into like a monthly drip campaign to get them a little bit more warmed up and excited by the time you are ready to go out and start to pitch them for some real dollars. So I wanted to self-servingly shill that advice in that video if you go to our YouTube channel for that. But Immad, the question's for you. You mentioned that like, you know, you look at like the milestones ahead that you need to achieve, the metrics ahead that you need to achieve. We're finding that metrics and milestones to get to the next fundraise is like a moving target. How do you figure that out of what you actually need to do in order to unlock that next raise?
I think the reality is there is no exact answer. So I think it has to be something where you feel good about it. I know that's like a bit of a weird thing to say, but like, you know, a lot of fundraising does come down to like confidence. Like if you feel like, hey, I have really de-risked something, then you will like genuinely say that to people. If you're like, if you're like, okay, you know, I know this is working, like I have this many customers and like, you know, customers are coming to me faster than I can handle them, I need to go hire a team. Like that's a very different like way of saying things versus like, yeah, you know, I don't know where I'm going to get my customers. And I think so, like, you just have to commit to something and go for it. But there is like truth to some of the milestone stuff, right? I think like you go talk to enough, like it's company dependent, right? Like if you're doing a B2B SaaS company, there is like a level where like a seed investor will be interested, and there is a level where a Series A investor will be interested. And it's not perfect science. Like there's definitely exceptions where, you know, either you hit the level and you still are not fundraising ready, or you blow past, or if you nowhere close to the level and suddenly you raise a big round kind of thing. But you go talk to enough people, there are like rough milestones per industry that you can think about. So I think there is answers, and you just have to like commit to something. On like, I mean, the good thing is like right now, at least if the milestones are moving, if anything, they're like moving downwards, right? Like it's becoming easier and easier to raise the next round, just because this market is like so crazy. So if you commit to something, like it's much better to overshoot, right? Like it's like you want to be extremely fundraising worthy by the time you're fundraising.
Yeah. Okay. I'm so sorry, Janelle. I know we have more questions, but there's one more question follow-up that I got to ask Immad based on his response. So you mentioned one of your angel investments that's doing great, Prometheus, taking carbon, turning it into fuel. With these kinds of more future tech, deep tech kind of plays, what milestone were you looking for as to like, yeah, take my money?
You know, I was a seed investor, so and it's such a capital intensive kind of company, and it's also something where, you know, it's so crazy, especially when I invested in it. Like this was like before climate tech was like even that hot, right? So I think there, as a seed investor, you're looking for like, what is this person's real expertise? And this guy had like built this thing and had a patent for it and all this kind of stuff. So, I mean, with hard tech, you need some deep expertise. Like people aren't going to fund someone who doesn't know what they're doing in this kind of crazy kind of environment. So either the expertise is like academic, or the expertise is like previous company. Like a lot of people doing space tech now are like coming out of SpaceX or Blue Origin or whatever. So I think that's one big thing you look for as a seed investor. And then the other one is, it's funny because like, I don't know always how much truth there is to it, but like you can use LOIs as a way. So LOI stands for letter of intent, but hard tech, deep tech companies do use that all the time, where they basically go and talk to people that they will sell to in like 3 years from now, right? They're like, they'll go sell to like someone and say, hey, if we build this thing and hit this kind of spec, like, would you pay for it? And obviously, yeah, it's not perfect. Like, there's a lot of ifs and like buts, but it should, yeah, if someone comes to you and like this definitely happens, is like someone comes to you with like 250 million of LOI across like 10 companies, and they're like, all of these companies want this if we just build it. That, you know, it shows A, that they can get to the companies, B, that there is some sort of market need, right? And then C, the problem changes from like, it's hard tech is kind of weird. Like often you want the problem, you want there to be one big problem in, when you're funding a startup. Like in hard tech, the problem is not like, does the market exist? Ideally, the problem is, can you make this thing? So by having those LOIs, it helps de-risk, like, does the market exist? Like Prometheus was a no-brainer in terms of, does the market exist? But there's definitely like some hard tech people, come pitches I hear where I'm like, I don't even know if that market exists, even if you solve this like extremely impossible thing to solve. So I think that like in a normal startup, often like the market risk is like the biggest question, whereas execution risk is like less of a question. So I think that's like how you flip that, but it's hard. Like, I don't know how these founders do it.
Yeah, I love that response. And so, Jana, I know we got a bunch more questions for Immad here. Anything else you're seeing coming up that's cool?
Immad, I hope you have all day, because that's how long it's going to take to get through these questions. But scanning through, one of the themes that I keep seeing over and over is from folks who look like first-time founders, have a lot of operator experience, and they're really struggling with this idea of the initial stages of building their list. One question keeps coming up: how can you use your founder network as a potential way to find investors? And how do you do that in a way that doesn't seem ego-driven, or where people are going to want to protect their connections? Any thoughts on that?
I think it kind of, people want, there is like this, like, yeah, a founder wants to introduce great companies to their investors. Like that's actually like the incentive is actually like exists there, because like, you know, you want to seem as a founder that you're connected with people, that you're bringing some great deal flow. So, and I, yeah, even before I started investing, I was introducing people to investors of mine for a really long time before I was investing. So like there is, the incentive structure exists. I think the main thing to do, which like flips it from like, you know, oh, I don't know if I want to make this introduction, to like, oh yes, of course I want to make this introduction, is like, you basically have to prove to the founder that you are worthy. Yeah, not worthy is like the wrong term, but you know, you are ready to like go talk to that investor, and you're going to, you know, represent something good to that investor, right? Like it's not, the founder also doesn't want to be embarrassed by making an introduction. You're like, you know, just a little lame kind of thing. So I think like step one is like, I mean, step one to all of this stuff is just make a good company, right? Like make a good product, make it something that people want, and like everything else kind of flows from that. But it also flows from this, like if you're ready to actually talk to investors, like you've proven some stuff out, and you, when you talk to the founder, you're like, you know, obviously like it's a friendship, like you're not trying to always like get things from them, but you know, you're like hopefully talking about the real problems that you're facing in your company, and like you're sharing these things, and yeah, and then they can see, okay, this guy's making progress, like he's getting closer to like talk to investors. So like they are like the, you know, for them to be useful introduction, they do have to be a gate, right? Like if they were willing to introduce every single entrepreneur they ever met, then like the introduction would be worthless, right? So they are a gate. So you have to like cross that gate, and you have to think about it in that fashion.
Yeah. And what Immad said it earlier in our conversation too is so true, that there is kind of like a hierarchy of warm introductions. When it comes from a founder to us at Hustle Fund, we're like, abso-freaking-lutely, like we should probably talk to these people. And in some ways too, it's awkward if we don't. Like it's almost like rude or disrespectful, just like, hey, I really respect you and your judgment. That's why I invest in you. So I at least should give it some time to your friends. And then after that, investors, and there's a little bit less signal there. And then it just keeps going lower and lower. If it's her mom, it's like my mom, if she, which on occasion, like once a year, she'll send me a deal from someone at church. I'm like, oh gosh, right. But I have to take that meeting because it's my mom. No, I'm just kidding. why don't we go on, Janelle? My mom might be watching this recording a little bit later. So
Okay. Can we talk a little bit about the metrics that you're using if a founder is pre-revenue with their product?
Yeah, I just think about like, what are they de-risking, right? Like what, I guess depends what pre-revenue means exactly. Like if they haven't launched anything, then it's like, yeah, there's like layers of de-risking, right? Like it's like, do they have a team that could build this, right? Like, and like that's like the team risk, right? Sometimes you meet someone and they're like a non-technical founder and they don't have anyone working with them that like could build this, and then you're like, can you even build this, right? Like that's like one big de-risk. So that's team. Then after that is like, can you build this product? So like sometimes people are pre-revenue, but they've built out most of the product and they can just demo it to you. So that's interesting. Number 3 is like, you can de-risk the market and still be pre-revenue. Like you can have pilots lined up. You could have those LOIs that I mentioned. You could be like, what's the term? It's like when you're a design partner. Yeah, design partner. You can have design partners. So you can de-risk things without being like in revenue. And then 4th is like, obviously, like, do they have other metrics? Maybe it's not revenue. I mean, if it's like a social network, maybe it's users. If it's like something that could make revenue later, yeah, sometimes people have like great businesses, like maybe Airbnb and Dropbox and like Twitter uses like some cool open source software and it's not making any money yet, but like they can show other metrics that show big companies that have money are using this and need it. And then they can make a story about how they would make revenue in the future. And actually that story is also important. Sometimes pre-revenue companies don't even have a good, my second company that we just touched on, ClickPath, we didn't even have a good story that we could come up with how we would make revenue. But like having a really nice story is helpful as well. I feel like, sure, we don't make revenue, but here's someone else that makes a ton of revenue doing something similar. And like, this is how we do it kind of thing. That's obviously an easier thing. And then last one is market comparison, right? Like one thing I've seen is like, oh, there's these 5 kind of companies that are public companies that are worth more than 10 billion. And like, they did it and we're in the same market, we're pre-revenue, but we know that this market is big. And therefore like, you know, the market sizing thing can kind of answer the question of a pre-revenue company.
I want to actually marinate on this question a little bit here too, because there's like a pretty famous tweet. I am a venture capitalist, so I'm very influenced by Twitter. By Justin Can, founder of Twitch. He said, like, first time founders focus on product, second time founders focus on distribution. And then at Hustle Fund, we actually do have a very strong bias towards the principle behind this, which is, yes, product mix is very important. Great user experience is important. If you want to see a great user experience, by the way, go to mercury.com. And then, but very importantly too, is like for founders, like we really like founders who are serious about building a going concern. And for me, a definition of a going concern is almost like caveman logic or cavewoman logic. It's like more money comes in than leaves. That's like basically all I need to know about the business model over time. It doesn't have to be from day one, but it has to happen at some point. And some of the most compelling pre-revenue businesses I've seen were like, hey, I'm going to create a new CRM. I'm like, oh gosh, we have so many of these. It's like, it's going to be really cool. It's for small businesses. I'm like, okay, I'm not really interested yet or whatever. And then they're like, by the way, I was the executive sales VP at Salesforce for 20 years. And I have this incredible book of business and all these friends have committed to actually buying my products and distributing it for us when we launch. And then I'm like, oh yes, right? Like this is someone that actually, even though they haven't generated the revenue yet, seems to have the credibility and interest orient towards sales and marketing and maybe even pre-sales too, while the product's being built. And for us, like I get really excited about those kinds of B2B or SaaS businesses because it's just like they really are thinking hard about distribution. And I trust from their experiences that they know their customer development to make it happen. Anyway, I just want to outline that bias. I'm not sure, Immad, if you have a comment to that, but just want to share that too.
Yeah, I think that makes sense. I mean, it just depends on the business a little bit. Like, you know,
It does.
Like hard tech again, like you can't always have the revenue for a long time. So you just have to work harder if you don't have revenue. Like if you're pre-revenue, you have to have other things that really work for you. So
yes,
like having the relationships helps, like having a deep knowledge helps. Like the stuff isn't free.
absolutely. Janelle, hit us up with some more. We got a few more questions, maybe 2 or 3 we can fit in, maybe 2.
Yeah. You know, Eric, this one is actually for you. Are you ready for this one, Eric?
I mean, I shouldn't be in the hot seat here, but yeah.
Well, you are in the hot seat now. Eric, the question that we've seen more than anyone that has been asked today, what are you planning to do to celebrate your 40th birthday?
Oh my gosh. Oh my gosh, are you kidding me? Oh my gosh.
Happy birthday, Eric.
Thank you guys. What a wonderful surprise. All the people I love in my work setting are here. Well, that's
my garage.
Okay, well, let me give them first I'm gonna give them a hug. That's one of my 40th birthday things.
Happy birthday.
Next, I'm gonna transmit COVID to them.
Great.
And then, wow, thank you guys so much. That is so incredible. I'm like, almost, I want to cry a little bit, actually. Yeah, cry because Immad is now experiencing like some strangeness in this session that should be about him and not me. But,
I was pre-warned about this, Eric.
Okay, thank you so much for that, Immad. I mean, like, holy smokes, this is like, I'm living like my best life, right? I get to work with these incredible teammates every day. I have a wonderful family. I get to meet heroes like Immad in this space for doing incredible things that I only could have dreamed of when I was starting off. So I'm celebrating it right now, I guess, in the garage, eating some cupcakes with my BFFs. So appreciate y'all so much. This is so sweet. Thank you guys. Yeah, and thank you, Immad, for playing along too.
Oh, thanks, Eric. You're a good sport.
Okay. Wow. Okay. I think we should probably wrap it up because I'm like very speechless here. My heart's pounding. But I want to just first give a huge thank you for folks in the chat. Can you please give claps to Immad? He's the founder and CEO of Mercury. Yes, as well. For generously sharing his insights, his time with us in this community to tell us also some of those stories about his beginning journey, which had ups and downs as well. Immad, it was such a pleasure to speak with you today.
Yeah, I'm happy to be here and happy to be a little part of your 40th birthday. Congratulations.
Yeah, you can come down to the garage later today. I got a cupcake for you. And then also for those of you in the audience today, thank you so much for coming out and spending your time with us too, to learn about Immad's journey, to hopefully get some of your questions answered too as you're beginning your journey. I do want to provide a final shout out. I'm not just being paid to say this because no money is actually being given to us at this point, but like really Mercury is freaking amazing as a banking platform. You really should go check out mercury.com. Among the 302 companies that we have funded at Hustle Fund to date, Mercury by far is the top banking partner that our founders are choosing to do their work. If you want to find a modern bank, a team that's actually adapting and growing as fast as you are, and really cares and has provide great services, please check out mercury.com. They're freaking awesome. And yeah, just grateful again for today's session. Thanks for the birthday wishes as well.
Shut up and eat your cupcakes.
Will, you don't get one. All right, take it easy, y'all. All the best, y'all.
Bye.
Okay. Bye-bye.